Hey everyone, my name is Ricky and welcome to Peaceful Investor. Most people think investing is about chasing the hot stock and reacting to every market move. But I have learned the opposite is true. My philosophy: patience over panic. I focus on strong businesses, long term growth, and the power of compounding. Because wealth grows best when you give it time and space to breathe. The real edge is a quiet and peaceful mind. Block out the noise, avoid fear and greed, and make decisions based on facts, not emotions. If you want to invest with clarity and peace, join me here at Peaceful Investor and let our wealth grow the calm way. When I look for high growth companies, I am not chasing big numbers. I'm looking for businesses I actually understand. If you can't explain how a company makes money in simple words, you probably shouldn't own it. I focus on companies with clear demand, scalable operations, and room to expand for years. The best high growth stocks are ones where you can picture exactly how they will grow store by store, product by product, customer by customer. That's why CAVA caught my attention. They are not just a restaurant chain, they are building a lifestyle brand around healthy Mediterranean inspired food. I can walk into a store, see the lines, taste the products, and understand why people keep coming back. With a growing footprint, strong same store sales, and a massive untapped market, Kawa has the qualities I look for in a high growth investment. Remember, the best growth stories aren't a mystery, they are businesses you can see, touch, and believe in. Kawa went public on June 2023 at a price of $22, debuting on the NYSE under ticker name Kawa. Fast forward to today, and the company is sitting around at 8 billion market cap. What's driving the story? Footprint expansion and strong unit economics. They have recently opened their 400 restaurant, and 2025 class is pacing average unit volume above $3 million. That's a powerful sign for new unit productivity. Management's long term roadmap is clear: 1,000 restaurants by 2032. Yes, expansion brings higher pre opening and food cost, but the category tailwind and the brand demand are still in their favor. If you believe in scalable, fast casual concepts with improving systems and a long runway, Kawa is one to watch. Let's trace Kawa Group's financial journey from 2021 to end of 2024, focusing on how revenue, operating income, and net income have evolved. In 2021, the revenue was $500 million and the gross profit was 37 million and the operating income was minus 27 million. So basically the operating income was in negative. The net income was minus 37.39 million. Kawa was still in its scaling phase, solid sales, but still deep in investment mode. In 2022, their revenue went up 564 million. It was 12% growth. The operating income was minus 14.78 million and the net income was 58.99 million. So the sales ticked up higher, but operating income and the net income was still in negative. In 2023, turning the corner, revenue went up 728 million, 29% growth. Operating income was 31 million, and the net income went up to 13.28 million. This was the breakout year. Kawa turned profitable thanks to the stronger same store sales, new locations, and operational leverage. And in 2024, sales was 963.7 million. It was 32% revenue growth. Operating income was 60, almost 61 million, and the net income was 130 million. So you can see year by year they improved their business. And CAVA just posted their Q2 2025 earnings. The revenue jumped 20% year over year to 278 million. Same store sales were up 2.1%, slower than expected, but they still opened 16 new restaurants, bringing the total to 398. Average sales per store hit 2.9 million, and adjusted EBITDA grew 22% to 42 million. Net income came in 18.4 million. On the balance sheet, CAVA ended the quarter with 111 million in cash and zero debt. It's a strong position. For the full year, they lowered the same sales growth to 4 to 6%, but increased their opening target to 68 to 70 new locations. So this is their forecast for end of 2025. And here I want to explain same store sales, which measures the revenue growth from restaurants that have been open for at least a year. It tells investors whether existing stores are selling more without counting the new locations. Same-store sales show how well existing CAVA restaurants are doing. In Q2, the growth slowed because customers are being more careful with spending. There were fewer price increases, and the last year numbers were already high. It doesn't mean the business is shrinking, but it does mean the growth is coming more from opening new locations than from selling more at existing ones. So the slower same restaurant sales growth, which was only 2.1%, the customers are being more careful with their money. Higher living cost means some are visiting less often, ordering fewer extras, or choosing cheaper options. That adds up to slower sales growth in existing stores. Even moving forward in the forecast, the CAVA has reduced their same store sales to 4 to 6% before they were expecting 6 to 8%. So this is something needs to be noted. And another little red flag, their net income was also slightly down compared to last year. So this year it was 18.4 million compared to last year 19.7 million. Um, but there are good things as well. So they've increased their forecast for opening new restaurants, which is 68 to 70. Before it was 64 to 68. So that's a good news. Now let's look at their price chart. The Kava is currently trading at $68.93 after a big drop this year, down around 40% from its all-time highs. In Q2, revenue jumped 20%. They opened 60 new restaurants. They still have 101 million in cash and they have no debt. The negatives, same store sales were up just 2.1% below expectations, and they lowered their sales growth outlook. Here is my take. Short term, expect more volatility, but long term, with a strong balance sheet and aggressive expansion, Kawa could still be a growth story worth watching. For patient investor, this pullback might be an opportunity. So by the way, I bought on this price, and if the price drops more, I will keep adding. This is not a financial advice. I'm not a licensed financial advisor. Always do your own research before investing. So that's it for today. Hope you like this video, and please subscribe my channel and leave some comments and give me ideas for my next video. Thank you so much for your time.